Dr. Adnan Chilwan is Group CEO of Dubai Islamic Bank and joins me at the Global Islamic Economy Summit in Dubai. Very nice to see you again. Look, you've just got back from DC and the IMF World Bank meetings. There is a lot that the world is worrying about right now. The US election, Brexit, the end of globalization, or at least a pause in globalization, regulation. What did anyone talk about that was positive in DC?
Well, clearly, I think we are living in a world which is not insulated, right? We are a part of a financial globe as such. So the challenges will continue to exist. I think one has to take those challenges within the stride. What officials at IMF have been trying to steer at is more infrastructure development, so that it can actually steer the economy in the right manner. Now, infrastructure development should not only be concentrated in developed economies, but also, the underdeveloped economies. I think that's the only way that we can overcome a challenge like this, Axel. Otherwise, oil volatility, falling commodity prices, geopolitical situation around the world. This is something that one has to take in the stride.
Now, we did a panel last year focused specifically on Islamic banking and its strengths, its challenges. How far have we come in those 12 months? We talked a lot about expansion, and I'm going to come on to expansion in a minute, but how do you characterize the sector now?
Well, I think the sector continues to still be very, very nascent, right? We are a 40-year-old industry.
But has it grown as quickly as you wanted it to over the past 12 months?
Oh, absolutely it has. If you look at the annual compounded annual growth rate, we've been moving at around 17%. Now, skeptics and cynics would always say that, because your denominator is small, the industry is growing at a much faster pace. But, the acceptance of Islamic finance has actually grown in the last 12 months. There are non-Islamic sovereigns that have come into the space, and, the likes of South Africa, Luxembourg, UK for that matter. Yeah. So I think where has the Islamic finance industry gone in the last 12 months? I think in the right direction, which is up north. And percentage can always be relative. Performance is always relative.
You recently received the Market Leadership Award in Jakarta, and you talked then about expansion. We talked last year about expansion. Indonesia, Africa. Let's talk a little bit about that. Starting with Indonesia, how's that going?
Well, Indonesia, we've completed our aspirations of having 40% in Indonesia. Today, we have management control of the bank in Indonesia. And as it stands, we've made a lot of changes in terms of rationalization of systems, rationalization of people. So I think from a strategic perspective, Indonesia has really, reached to where we want it to be. Okay. Now this is a gestation period that we really have to turn around things and enhance ROEs and ROAs in any investment for that matter.
I guess the other end of the spectrum is parts of Africa, Kenya, which in my view has not been particularly successful. You've been having trouble there. Can you give us the timetable, if you have one, for expansion in Kenya? And tell me, given the troubles you've had, does that concern you when it comes to global expansion altogether?
No, it really does not concern me as far as global expansion is concerned. When you want to enhance your offerings in parts of the world, globally, you have to take in stride the regulatory process of every country. This is something that we anticipated even before we went into Indonesia or Kenya. You see, what has happened in Kenya is that while we made extraordinary progress on our Kenyan company under formation, we've completed everything required from a regulatory perspective. Kenya has gone into a self-imposed moratorium on new bank licenses, and rightly so. It's because there are a few banks that have gone into receivership in Kenya. So I think the regulator has to be very choosy in giving the license to the right player. A complete fit and proper due diligence needs to be done, which is completed. And I think it's just a matter of time. We've also met senior leadership. There was a recent UAE delegation that went to Kenya in order to make sure that trade ties between both the countries and investment ties between both the countries are maximized.
So you don't regret?
No, absolutely not. Absolutely not. I think Kenya is our investment in Kenya is a matter of time, and once we get our final license in Kenya, we are very, very optimistic that the ROE and ROA targets that we have forecasted for ourselves will be definitely met.
Capital raising plans 2016-17?
Well, we've already done a capital raising in 2016. As you would know, we've enhanced our Tier 1 common equity Tier 1 by doing a rights issue. But in very difficult times when liquidity was the biggest elephant in the room in the market, our capital issue was oversubscribed 3 times. So that would show you the sign and the confidence that investors and shareholders have in the franchise. As such, we are now well capitalized and are equipped to meet the Basel III regime, which is round the corner. As far as the regulator is concerned, there are whispers around what should one expect, and I think we made the right thing by tapping capital at the right time.
Dr. Adnan Chilwan, thank you very much indeed.
Pleasure,
Thanks
Axel,
for talking
pleasure.
with us. Dr. Adnan Chilwan, Group CEO of DIB. I'm Axel Threlfall. This is Reuters.